the screen. Awesome. Thank you, Jose. So obviously today's agenda, obviously we're going to be going over the 3 proven strategies to lower your interest rate so you guys can save money, right? Monthly, closing costs, all of that. So we'll be going into 3 different strategies. They shouldn't take more than 30 to 40 minutes. And then again, I said at the end, we'll kind of have that Q&A. At the end of the webinar, I am giving something away. So if you guys stick through, you'd be able to kind of take advantage of that surprise. So this kind of gives you a summary of what we'd be going through: traditional buy down, temporary buy down, and then taking the higher rate and what that looks like and what that actually is. So the introduction, obviously I'm a real estate agent, help people buy and sell houses, but more importantly than just helping you purchase a home is I hope you save a ton of money while doing it, right? Because I'm in the business of saving you money. I'm in the business of making sure that you're protected and represented. So these are a handful of my clients that have closed within the last 60 to 90 days. These are my clients that came from Wisconsin. That's Don and Aaron. When rates were 6.5%, they got a 5.25% rate, and they came out of pocket, like cash to close. I think it was less than their down payment because they got a grant. So they were about like 15,000 all in with the 5.25% rate. So that's about 1.25% less than what market rate was. The Trilleros family, they only came out $17K out of pocket on almost a $600,000 home. So they took a standard rate, but I was able to negotiate them even more closing costs to help them cover their closing costs and also buy down the rate a little bit. Edwin Correa, when rates were 6.5%, we were able to get him a 4.875, which is a huge difference. The difference in your monthly payment in that is hundreds of dollars, like almost probably $1,000 in your monthly payment. And then we have Vanessa Hernandez, which she got a 5.5% when rates were 6.25%. So why I show you this is just to show you guys, like, this is real people with real results that actually took advantage of these strategies that I myself and my team do to obviously help you guys save more money. So the first one is obviously a traditional buy down. I'm sure you guys have heard of it. You've maybe seen Instagram reels or TikToks about it. And basically what a buy down is we negotiate either with the seller, the builder. We say, hey, Mr. Seller, we'll purchase your home at $500,000, but we need, $10,000 back in seller credit. What we use those seller credit for is, instead of putting it all towards your closing costs, is we put it towards the rate. And so some people may say, well, why would they, why just ask for the 10,000 and not get a price reduction? So on average, you're getting about $100 difference for about every 10,000 on and off the price, right? So here's an example of a $500,000 home. This is just principal and interest. This isn't taxes and insurance because that varies. But at a 5.5%, you're at $2,800 a month, right? Versus at 510, oh, we put an extra 10, 510,000, you're at 3,060, but at a 6%. So this should have been 500,000. So that is a $220 savings using those $10,000 to buy down your rate instead of asking for a price reduction. Does that make sense? So we're utilizing the funds that aren't coming out of your pocket. It's coming from the seller and the builder to completely give you the funds to lower your rate. Obviously, depending on your interest rate and the cost of the rate is going to determine how much we could actually buy it down. So the next one is a temporary buy down. So this last one, it is traditional, meaning that we'll get it for 30 years. Right, so rates are at 6% and we buy it down to 5.5%. You're gonna have a 5.5% rate for the 30 years of your term, unless you refinance out of it. So you'll be saving $220 a month if you do that times 30. That's a number, times 12, then times 30. That's a number that's too big for me right now. But the next one is going to be a temporary buy down. And let me know if I'm going through these too fast. I talk really fast, so let me know if you guys need me to slow down. But a temporary buy down has been more popular recently because obviously we're in a high interest rate era, and we know that eventually these rates are going to come down. So there's the most common one is a 3-2-1, meaning we buy down the rate for 3 years. It works the same way as a traditional, where we go and say, hey, Mr. Seller, I'll purchase your home, but I need $10,000, $15,000, $20,000 to help me buy down the rate. And so what that looks like is, here again, a $500,000 purchase at a rate of 6%. Your payment is $2,997. Again, this is just principal and interest. So what we'll do is we'll temporarily buy it down for the first year to 4%, meaning that your payment goes down to 2,387. So you're saving $600 a month because of that. So that's about $7,300 a year, your first year in savings, right? So it's like, okay, you know what, that's $600 less a month. I feel good about that. Cool. What they don't tell you is the second year, we go to 5%, right? Because after it's a temporary, so every year it goes going back up until it goes to market rate. So when you're at that 5%, your payment goes up to 2,684 and your monthly savings go to $313. Over the course of a year, that's $3,763. The third year, it'll go back to the rate that it was at the time of your purchase. At this point, it would be a 6%. So we go back to $2,997 and we get zero savings, right? And then the fourth through the next 30 years, it's 2,997. But the total amount you save with this temporary buy down is $11,000 within just the first 2 years. Now, most people say, well, why would I do that if it's just going to go back, right? But the reason why we do temporary buy downs is because we're in markets like today, right? So when rates are tailoring 7%, now they're about 6.8, 6.5. It's still like, okay, those are still a little bit higher. You know, it's throwing our payment from 2,900 to 3,500, 3,700. Then what we do is we do a temporary buy down and we say, hey, we're set. We see the feds are going to be cutting rates in September, right? Because unemployment's too high, inflation's too high. We need the economy to be booming. They need to make money more affordable. So what they're going to do is they're going to lower these interest rates. If you're still within your first year and rates come down to, let's say, a 4.8, and you're like, you know what, I want to lock in that rate because that's a solid rate. You can refinance out of this temporary buy down and lock in that rate and then have that rate for the next 30 years. So it's temporary for the first 3 years, but the goal is to refinance within those 3 years. So you still take advantage of your savings, but you also lock in a lower rate than what you were quoted when you first purchased the home. Right. So you could do it for 3 years. You could also do a 5-year arm. It just depends, you know, once we have a number of what we want to invest into your rate, then at that point we can kind of play with it and say, okay, this is option one, this is option two. Or most people like to do option three, right? So take the higher rate. And the reason why I put this in here is because sometimes the initial investment is more important than the overall payment for some people, right? So taking the higher rate is something that's very unconventional. Not a lot of lenders do this. Not a lot of lenders even probably know about it, but this is something my team has utilized before. So again, on a $500,000 loan, with a payment at a 6% without any credit is just around $3,000, right? It's at 2,997. So if we were to increase our rate to about 7%, but we ask the lender for a $5,000 credit back, your payment goes up $3,333. So it goes up $330 because you're taking a higher rate, but you're getting a $5,000 credit. So that helps offset your initial investment upfront. Right. And so what'll happen is if you divide these $5,000 you're getting back by $330, it's going to take you about 16 months to make those $5,000 back, right? Within that difference. But the goal again is to refinance before that 16th payment and you essentially save more money, right? So if you're on like month 6, month 8, month 12, month 14, and you decide to refinance because rates are lower than 7%, then at that point you just saved even more money, right? Because now you have your house. Now we've got your closing costs covered. And yes, you took the bite on a little bit of a higher rate, but at the end of it, you're getting at the end of it, if you refinance before about a year and a quarter, you save more money. So the big talk within the last 2 years is feds are likely to cut the rates over the next year or so, because everything that happened during COVID, obviously everybody knows a lot of money was pumped into the economy. And now we're seeing the result of that, right? We're seeing prices go up. We're seeing home affordability go out the door. And so the feds are now seeing that and they're like, okay, we need to make this more affordable. How do we do it? So this is a way to come into a home with little out of pocket, meaning just your down payment, assuming we can't get you a grant, and then you just refinance out of it. So this is a good tactic when it comes to multiple offers. So even though prices are up, interest rates are up, we still have a lack of inventory. So what that means is when we go show a house that's priced competitively and there's 10 other people that want to put in offers on that home, obviously we can't go in there and say, hey, Mr. Seller, we're going to give you your asking price, but we want $10, $15, $20,000 back, right? Because that's going to make you look like not a strong offer. And my job is to present you as the strongest buyer possible to make sure we can win that offer. So what we could do here is take this approach, right? Is we're going to take a higher rate. We're not going to ask the seller for any credit, but we're going to get you a lender credit. And so you'll save more money out of pocket. And then eventually the goal is, even if rates don't drop, let's say you took a payment at 7%, you get the $5,000 lender credit. Let's say rates remain the same. They remain at 6%. After your 6 month, you can refinance to market rate. It costs you nothing, nothing happens, and you just saved $5,000. You paid $1,500 over the course of those 6 months, or yeah, $1,800, but you got $5,000, right? So there's different ways where you can maneuver it where it actually makes you money, and it's just being creative, right? What makes more sense for you? Would you rather get $5,000 at the close of escrow, but pay, a little bit more every single month for 6 months? Or would you rather just take the bullet on paying all of your own closing costs and getting market rate today? The next one is, this is just a little bit of a bonus one, is these builders. So a lot of what I do, a lot of what I post is new construction, right? And a lot of people don't know that they offer incentives. And what incentives basically are is we go to the builder and we say, hey, Mr. Builder, we really like this floor plan. We really like this model. What do you have available? And so we kind of go through the builder over what they have available, what those costs look like. And while they're saying that, normally what happens is they'll have a discount list. And that's normally properties that people just didn't perform on, or permitting was submitted late. And so they're kind of more eager to give off. So while they already offer you an incentive to say, hey, if you come work with us and our lender, we'll give you $15,000 in closing cost credit, right? You can use that to then go and buy down your rate, cover your closing costs. But if it's on one of these discount lists, which a lot of people don't know about, is I could actually go in there and say, hey, I know you're asking 550,000, but we need it at 520,000. And instead of the $8,000 incentive, I'm going to need $15,000 back in order to make this work. I literally just did this for my client last week. It's one, relationships that I have with these builders, and two, knowing that these builders' motivations, right? Just like a traditional seller and a traditional buyer, we all have motivations. Why do you want to buy? Maybe you want to get to a better school district. Why do you want to sell? Maybe you're moving out of state, right? There's reasons why we want to do these things and why we need to do these things. Same with these builders. These builders don't like holding on to these properties because it costs them more money than it saves them. So if it's a $15,000, $20,000 difference to them, it may not hurt them as bad, but I know that could be, life-changing for us, right? So I always make sure to go in there and I represent you, and I'm going to try to take as much money from these builders as I can and put it in your pocket. So the next thing is, well, what if the builder denies me and I don't qualify for the incentives, which happens probably 55% of the time to my clients, right? We walk into these builders, we say, hey, Mr. Builder, we want to purchase this property. And then they go to the cross qualification process and the builder's like, hey, you actually don't qualify for XYZ reasons. The thing with these builders is they're very, very cookie cutter, meaning if you don't have the most perfect financial situation, they kind of just like, sorry, we can't do it. But my lender, my preferred lender, they have done deals that sometimes are impossible to do, and we get them done, right? Because we care about the client and we do it by all means necessary. So what that does for you though, as a buyer, is if a builder denies you, it actually creates you more negotiating power, because then that that gives me the leverage to go back to them and say, you guys couldn't qualify my client. You guys, we tried your lender, we tried your backup lender, they still couldn't do it, but my lender can. Here's his conditional approval, but I'm gonna need, instead of that $8,000 you were offering, I'm gonna need 20,000, right? And then we start negotiating with the builder. And what we do is, once they agree to that credit, I then go back to my lender and I say, hey, this is how much credit we got. How much can we buy down their interest rate, or how much closing costs do they have? And which one makes more sense, right? Then at that point, it's a discussion with the lender. But that's just the power of negotiating overall. That's my favorite sport. I love going in there. I love going into the trenches for you guys, figuring out how much money I can keep in your pockets to do one of the three, right? Cover your closing costs, right? And you just have to come in with your down payment, which is going to be probably on average, let's say the median price range is 550,000. are going to be just around $18,000-$19,000 for your down payment, right? So you can either get all your closing costs covered, or heck, sometimes we can even do both. We can get all your closing costs covered and then get you a lower rate. So for example, on my purchase, I'm getting a 5.25% rate. The rates are at about they're tailoring around that 6.25% range. Getting a 5.25% rate, and I'm getting $14,000 in seller credit. So I'm going in, no closing cost and a lower rate. I could do the same for you and then some. So you could either do a traditional buy down, which is more expensive because obviously it's a fixed rate, right? So it's going to cost you more to buy down the rate because you're saying, hey, Mr. Bank, we want to borrow money, but I'm going to need it at this price for 30 years, instead of saying, hey, Mr. Bank, I want to borrow money from you, but I need it at this price, but just for a year. So the temporary buy down is a little bit more not affordable, but it's cheaper because we're only buying it for somewhat of a time instead of the 30 years. And then the third one is obviously we can take the higher rate. We can take the higher rate and save you, more cash in your pocket. And then obviously the fourth one is using the builder incentives to your advantage, right? Keeping money in your pocket, covering your closing costs, or buying down the rate. So the difference between these rates and your closing cost is hundreds of dollars a month, right? So what would happen if we ask for a price reduction, right? Is I know a lot of people ask me, well, like, why not just get $25,000 off the price? And it's because that 25,000 on average is probably going to save you about $200 a month, which seems great, right? That's amazing, $200. But if we use that 25,000, let's say we even used $15,000 of that to buy down your rate, your savings could be over $300, $400, $500 because we use that to buy down the rate instead of just taking a price reduction. So right now, most of the time when my clients ask me, like, well, what if we just go in a little bit lower? I say, let's not do that. Let's go in. And if you guys want to just have a lower loan amount, by all means. But when we really break down the numbers, it always makes more sense to just buy down the rate. Because even if we can get a quarter, half a point down, still cover some of your closing costs, still buy down part of your rate, you still end up saving more than what that price reduction is going to do. So it's just knowing what your goal is and which one makes more financial sense for you. Is all of that making sense? Am I going too fast? We're good. Okay. So negotiating strategies, and this is something that is very important, especially when we're going to builders and sellers and saying, hey, we want to buy your house, but I need money back, right? There's obviously a way to do it. And we don't want to go in here and just basically say, give me, and then they feel like they're receiving nothing, right? But there's two things that come into play on a contract, right? Obviously, price is a big one, but more than anything is terms. And what terms are contingencies. So you as a buyer have three main contingencies that protect you. And I think of contingencies as seatbelts, right? You have your inspection contingency, appraisal contingency, and your loan contingency. What that means is that protects you as a buyer and that protects your initial deposit. So without getting into everything that you need when you're purchasing a home, I always tell people it's easier for a buyer to back out of a contract versus a seller. Once a seller agrees to sell you the home, yes, they can back out, but they can get monetary damages, right? Because the buyer has financially invested into their home with inspection, appraisals, all of that good stuff. You as a buyer, you can go almost 3 weeks into escrow, decide you don't want to purchase the home and back out at no cost, and you get your initial deposit back, right? So with that being said, though, those contingencies obviously protect you as a buyer. When we're negotiating and we say, hey, we need $20,000, but I need to make you look as good as possible, is I'll shorten these contingencies. So on average, you have 17 days, right? 17 days to conduct all inspections, 17 days to conduct all your appraisal, and then 17 days for your lender to have your loan in place. Inspections normally take less than a week, so we can shorten that to 7 days, right? We can do appraisal, that's depending on the bank, but on average, we can do it within 10 to 15 days. And then your loan, if you're working with a great team like mine, we could do it as fast as 14 days, right? So there's ways to say, hey, we need a little bit of money, but in return, we'll give you time. You need to be in Florida in 2 weeks, we can close this in 2.5 weeks, right? And so that's a negotiation. So I always tell people when they're like, hey, well, I feel like I need more money or I need to save a little bit more money. I'm like, hey, let's talk about it. And if you want to make the move sooner, but money's the reason that's stopping you, let's figure out how to get you money, right? Whether it's the builder, whether it's the seller, whether it's lender credit, whether it's grants, there's money all around that we can get you to help you make that move sooner. If that's something that makes sense for you, but the only thing's holding us back is current finances, right? So outside of shortening our contingencies, it's always builder relationships. And I'm really, really big on this because yes, any agent can walk into a new construction home and say, hey, this is my client, they want to buy a house. Let's go look at the models. That's great. And then you go in and the builder's just gonna give you the general incentive they have, right? Versus when you have a relationship with these builders, I can say, hey, I'm gonna need a price reduction and I'm gonna need some more credit. And they'll go and fight for us, right? If we're just normal buyers going in to see them, they're just gonna be like, okay, cool, buy it or not. Versus me, I go in there and I'm like, hey, Vivian, this is my client, John. We really want this house, but I'm really going to need, $10,000 more. And they go in and at bat for us, right? Because you have to remember that the rep that sits in the front of the office represents the builder. I represent you. And so in my best interest is to use and leverage those relationships and those friendships to save you money. With that being said, though, there also has to be a very good level of communication. And the reason why I say this is because I have a client right now and I'm tag teaming this with an agent on my team. And we're selling their home to purchase their new construction home. And that's always a tricky trade, right? Because new construction has strict timeframes. It's either we're ready or we're not. Permits can be delayed. They don't have like, hey, it's ready October 5th. It's, hey, maybe it'll be ready sometime between October to November. So when you have to sell a home, there's a lot of moving parts when we sell it to then get them to the next one because we don't want to put our clients in a position where they're essentially homeless. So long story short, the builder denies my client, right? We have an offer on their home, builder denies them. It's kind of like, okay, what do we do now? Right. And the builder's like, well, I can no longer hold the home for them. We only have the 3 days passed up. The builder denied them. My outside lender qualified them, but we needed to go through that whole process, right? My clients were freaking out because they thought they were going to lose the lot. And what happens there is normally they would, right? That lot would be put back on the market and the next person could come in and swoop it in. But because I had that relationship with the builder, I said, listen, give me until Monday and I'll get this sorted out for you. And she says, okay, I'm going to just put it on a temporary hold until Monday. She's like, I'm not even supposed to do this, but I'm just going to act as if you guys are going to continue to move forward. And those are those relationships, right? Things that we normally don't get, we can get because we can leverage those relationships, right? Now, between what happened on Friday to Monday, my lending team is working not necessarily overtime, but they're doing their job to make sure that when Monday comes, we have what we need in order to continue to reserve that lot. So that's just all communication, right? And that's what I do. So you guys come to me, you guys say, Angelica, I want to purchase a home. Here's my finances. Here's where I want to be. Can we do it and can we not? And you let me go worry about everything else. So my job is to handle the stress, handle the headaches, handle the missing financial gaps. And all you have to worry about is saying, Angelica, I like this house. So that's just a little bit more in depth of when it comes to money, how do we get it, right? And that's kind of the stressful part. Like, okay, I want to purchase this house, but I know I may not have all my funds right now, or you know what, these rates are just, the payments that I'm getting quoted are too high. How would I even come up with that extra $10,000, $15,000 to buy down the rate? And so this is when all of this comes into play, right? Having a strong team behind you to negotiate for you, get you price reductions, get you credit, get you additional incentives. And on top of that, some of these builders are already offering great rate promos, meaning that they'll say, hey, we'll give you, if you come and work with our lender, we'll give you a 4.99%, which is what I'm seeing a lot of right now. We'll give you a 4.99% rate, or you can get a 5.25% rate, right? And so it's like, that sounds amazing, right? So let's go get you a good rate. And then say, but I'm not getting any closing costs. So then you let me go and negotiate you some closing costs outside of that rate. So we get you a rate, we get you some closing costs. You come in with your down payment, a solid rate, and you're in your home. And when everything starts booming, all you're doing is riding the equity wave, right? And so what made me really want to do this webinar is I'm actively practicing what I preach, right? I'm actively going out there, purchasing a new construction home and implementing these exact strategies to make sure that the monthly payment I quoted is something I'm financially okay with. So what's that? So because all of you guys made the time on a Sunday, which I know you guys should be having brunch right now, is I wanted to do something special. So I will be blocking out a few hours on my calendar tomorrow. to chat with you guys about your situation, whether you want to purchase tomorrow, whether you want to purchase 6 months, a year from now. I want to have a conversation with all of you guys and see how we can make it work for you guys. So with that being said, what's gonna happen is you guys will get an email after this and be able to schedule a call with me on my calendar. Whether it's tomorrow or you're like, hey, I'm really busy tomorrow, can we do Wednesday? You'll go ahead and be able to put it on there. All of this is going to be linked to letting me know you were on the webinar. So the next thing I'm doing too is just for you guys is if you're looking to purchase within the next 3 months, whether it's new construction resale, or even if you want to purchase and then we start looking and it's like, hey, maybe the finances don't line up because you were on this webinar, as long as you show us like, hey, I'm interested, you do your loan app or we start shopping, I'm personally giving you guys $2,000 of my commission towards your closing cost or buy down the rate. What you do with that $2,000 is completely up to you. You could use it to buy down the rate. You could use it to cover your closing cost. If we get the builder to cover your closing cost, you get a good rate and you're like, yeah, Henrik, I can't use the $2,000 because there is a cap of how much closing cost incentive you can get. Then if you want to use it for appliances or upgrades or repairs or anything of that nature, you get the $2,000. So I just wanted to throw that out there to you guys as an appreciation because I know you guys probably got up early. I'm a late sleeper, so I sleep until like 11. So I wanted to just show a token of my appreciation, let you guys know that I'm here to help you guys as much as possible, and then help you guys not only save money and purchase homes, but at least educate you, because I know there's a lot of stuff out there that's kind of like, well, buy now, take the higher rate, and then just refinance later. But what they don't tell you is ask everybody that bought that way 2 years ago, a year ago, when rates were still 7%, and they said, hey, don't worry about it, just refinance in 6 months. But they were kind of in that jam, right? Where they're like, okay, you know what, I'll bite the bullet on paying $500 extra a month because they told me I can refinance in 6 months. So that's where it gets tricky, right? Some people, they'll do it because they're told, but they're not educated. It's nice to say, hey, just buy it and then you refinance and you'll save $1,000 a month. But it doesn't work like that, right? Nobody knows where these interest rates are going. So I focus on getting you into a situation that you're comfortable with. And once you're comfortable with, then let's go look at houses. So with that being said, again, if you guys want to chat with me, you guys will all be getting a link after this webinar to schedule a call with me on my calendar, and you'll talk to me personally. And then if you decide to move forward, whether it's speaking to a lender, filling out your loan application, or actually going to look at new construction homes, you'll get $2,000 of my commission towards your closing cost. And even if a year from now, you guys come back to me and you're like, hey, Angelica, I'm ready to purchase a home, because you were on my first webinar, and I'm just doing this, like I just thought of it right now. Is it because you were on my first webinar, I will still keep my word and give you those $2,000, right? Whether, again, you use it to upgrade your closet in your new house, whether you use it for your closing costs or to buy down, that's completely up to you. So I'm going to open this up for questions. I don't know if you guys have if there was anything that maybe was a little bit unclear. I know talking about buy downs and all of that could get a little bit confusing. But feel free to ask away. I don't know if I can unmute you guys or if you guys want to text them in the chat, because I don't think I can unmute all of you guys. Let me see. Did everything I go over make sense? Was that like stuff that you guys knew, didn't know? We're in a really interesting right now. Is buying from a builder better than a seller? So I believe they go hand in hand, for the reason of what a lot of people don't know about new construction is you have a higher tax rate. So on average, a $500,000 house in today's market, today's rate, is about $4,000 a month. So yeah, $4,000 a month on a $500,000 home. If you go to a $500,000 new construction home, because you have that higher tax rate of about, on resale side, it's about 1.1 or 1.25%. Right? When we go new construction, your tax rate goes up to 2%, meaning that you go from $4,000 a month at 500,000 to about $4,300 a month on 500,000. So you're going to pay a couple $100 extra every single month just in taxes. But I always say that also offsets on the resale side, right? So on the resale side, obviously you're gonna have maintenance costs. Sometimes you move in, you need to do things, you need to fix things. And so I say, yes, you're gonna be paying $300, $400 a month extra in taxes, but that also is to kind of offset the maintenance costs you'll have on a resale home. Obviously, you could get a resale home and there may be very little maintenance. So it just depends. It's a personal preference. Do you want to have a higher tax rate, or do you prefer to just already be in an established neighborhood? And the reason why you have a higher tax rate is because they're building the roads, they're building parks, they're building up that community, and somebody has to pay for that. So is it better than a seller? I think it goes both ways also, because outside of the tax rate, builders off the bat normally have incentives. You walk in, they say, hey, we're gonna give you a 5.25% rate and $8,000 in closing cost. Great. Or, hey, we're gonna give you $20,000 towards your closing cost. You get to decide what you want to use that for. Amazing. A seller, we could be in multiple offers. We could also still get a really good deal. We could still negotiate you closing cost. I think it just more so depends where you want to be, what kind of home you want, and then just as a location of the new construction work. Because normally new construction is in more rural areas, because obviously it's brand new, it was dirt, and they're just building up that community. You didn't really cover two homes on the same land, for example, ADUs. If a person can afford a $4,000 to $5,000 single home, up to how much can a person then afford with an ADU on the property? To my understanding, you can use the rent for the ADU towards a down payment. Please clarify on both questions. You didn't really. Oh, okay, I get it. Sorry, it took me a minute. So you're asking, and correct me if I'm wrong, Josh, you're asking me if you purchase a home that has an ADU in the back at $500,000, right? Let's say that you're pre-approved for up to $500,000. You find a home with an ADU. Does the ADU help your purchasing power go up? Just so I can make sure I'm answering that before. I'm understanding that before I answer it. Elizabeth said, what is the first time homeowner programs? So right now, as far as first-time homeowner programs, you obviously have standard FHA. FHA requires 3.5% down. If we go off of $500,000 purchase price, you're at about $17,500, right? Besides that, you have your closing costs. So outside of your down payment, you guys have closing costs. I like to estimate another 2 to 3% for that. That could be, again, 500,000, anywhere from 10 to 15,000, which I try to negotiate as much of that as possible. So we have $10,000 in closing costs. We have 17,500 in down payment. So we're at about 30. I always say 32, 35,000 is a good place to be, assuming we negotiate, seller credit. As far as programs to help offset that, again, we have builder incentives. We have seller credit. That's obviously a negotiation. There's a bunch of grants right now. They're more so location specific more than anything. What areas are you looking to purchase in? And then is there grants there? Normally these grants require 640 or higher credit score. And then there is always tends to be income limits, right? You can only make certain amount. There's also obviously standard down payment assistance programs. And that's just a whole other spiel, because I'm a big advocate for down payment assistance. Do I think down payment assistance is for everybody? No. Yes, okay, so that was right. So Josh, yes, if the ADU is permitted, you can use the rental income to increase your buying power. So what that means is, let's say, the house is 600,000, so your payment's $5,000 a month. You only qualify for 500,000. In order to get that extra $100,000 in buying power, I'm going to say that you need to prove an additional $1,000 in income. So can we rent that ADU for $2,000 to offset that extra $1,000? And at that point, that's when we go to the bank and we submit them a rental market analysis for them to see that. How does down payment assistance work? Do you recommend it? So yes and no. I think for some people, it's great. I think it makes a lot of sense for some people, but what a lot of people don't tell you about down payment assistance is, I'm a very transparent person, right? And nothing is free. Nothing is ever free. You're going to have to end up paying it back. And what you do is you either pay it back when you refinance or sell the house, and you pay it back in your rate. So if market rate's at 6% and you get down payment assistance, now you're at 7% because you got that $15,000-$20,000, right? So does it make sense for you to save $15,000-$20,000 and keep those in your pocket? Or would it make more sense for you to take money out of your 401k and put your down payment in, right? Or would it make more sense for you to maybe get a gift and then pay them back? So it just really depends. I've helped a ton of clients get down payment assistance. It works for them. But I also do think it's very situation specific, because some people, if interest rates are 6%, down payment assistance rates are 7%. All you really have to do is you just have to keep it for the 6 months, and then you can refinance out of it. But if you have to pay it back, you need to make sure you have enough equity in your home to then refinance out of that rate and get market rate. So it just depends. You're gonna pay a couple $100 a month more just to get, your down payment upfront from the state of California. Hi, Angelica. What if your credit has been pulled more than 2 times within a year? Is it best to wait until it's cleared out? Or how negative can this impact you as a buyer? That's a great question. So as far as it being pulled, was it to purchase a home? Was it to buy a car? Was it to get a credit card? Why exactly did you get it pulled? Nonetheless, but if it's 2 times, so the good thing to know when you're shopping for homes and you're shopping for lenders is make sure you shop. And the reason why I say that is because you have about 30 days to get your credit ran as many times as you want. You can get it ran Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, and it doesn't even ding your credit until it's after those 30 days. So if you are looking to purchase a home, I always tell people go and ask all the lenders you want to ask to give you a quote. And what happens there is you have these lenders compete for your business, because the lender's gonna say, oh, well, like, let me see what they're offering you. They're gonna go back and see how they can beat that rate, beat your closing costs to earn your business. So the best thing is you save money. The worst thing is you stay with your first lender that gave you the best deal, but at least you know you got the best deal. As far as your credit, I would say if it's just a ding, it shouldn't hurt you too bad unless it literally dropped your credit a lot of points. But there's things we could do, like a rapid rescore, which allows us to see, it's kind of like a simulator, is if Esmeralda does XYZ, her credit score will go up 20 points, right? And it doesn't cost you anything. It's just part of, us helping you guys purchase homes. Can I qualify for a first-time buyer loan even though I have a house? Yes, so you get FHA every 3 years, meaning you can be a first-time home buyer every 3 years. Do you plan on selling that home or renting it? The only thing we'd have to prove is that you're not gonna live in the current home you're in, so just like a rental agreement or something to prove that you're moving. And the house we purchase is gonna have to either be a little bit bigger, a little bit smaller, so we can say, hey, they needed extra room or they needed a downsize. There just has to be that difference. The second question is, if you can afford a single family for 400 to 500,000, how much more can afford money for a duplex? When you say grants, what grants are available for first-time buyers? How much more can you afford money? Again, buying a multifamily and using the rental income to increase your purchasing power is just going to be dependent on obviously how much can you rent that additional unit for, and then how much is that going to increase your buying power. When you say grants, what grants are available for first-time buyers this year? So there's some that cover, because we are in the Inland Empire, we tend to be able to receive most grants because we're obviously not like in San Diego or LA. There's grants, I forgot the name of it, but there's a handful of them. I have a list of them. I could probably email those out if you guys would like to know all the grants that are available. There's also hero grants for people that are like nurses, firefighters, first responders. There's grants for that, so, an extra $5,000 to help you just because of your line of work. What is an average amount of money to save before starting the house buying process? What is the average amount of money to save? Oh, so I would say it just depends on your purchase price, but I always tell people a really good place to be is between $30,000 to $40,000, right? Your down payment on average is, again, if we go off of 550,000, then you're going to be, let me actually do this math. So your down payment is going to be just under 20,000, and then you're going to have closing costs. And the reason why I say 30 to 40,000 is because in the event the house you really want is in multiple offers, we can go ahead and go in there without asking for any seller credit. And so that just makes you look stronger as a buyer, and you have the funds to cover your closing costs, right? On the flip side, let's say we get a builder and they can cover your closing costs. Then the great news is, okay, you were prepared to spend 30,000, but now you have an extra $10,000 to go and furnish your home. So I always say 30 to 40,000 is a good place to be, assuming we get no seller credit. But I've gotten into people into homes with as little as $5,000. So it just depends, but I would say a good place to be is 30 to 40,000. regarding hero grants, what if you're not a nurse but work within the health industry? Would you still qualify? So I tend to get that question quite a bit. I'd be more so asking for the lender and for them to look at the actual terms, but I believe you will. But I also don't want to say yes. I don't want to say yes, and I don't want to say no because I'm not 100% positive. But I do remember somebody asked me that similar to the teaching industry. They weren't exactly a teacher, but they worked at a school and they would qualify. So that's why I don't want to say yes. I don't want to say no. But if you want me to double check on that, I definitely can. This this is actually a lot quicker than I thought. I thought this was going to take me like 45 minutes to get through. Did you guys feel like I went through everything too quickly? Was there anything that didn't make sense or that was kind of confusing or I should have elaborated a bit more on? Do you guys have any other questions? So I'm very interested to see where this market goes. I don't know if you guys heard the great information. Thank you, Jose. It was all clear. Thank you. I'm glad. Did you guys know about these strategies or are these all new? Any feedback would be appreciated it. I thought you did a great job. I would like to know more about older homes and not so much as just new construction. Would you be able to send the recording? I came in a bit late. Yes. Angelica, would you be able to share your presentation? Yes, I definitely can. You are the best. Thank you, Oksana. You're so sweet. Some was new to me. Thank you, Marcos. And Josh, as far as older homes, so this can apply to either or. I just want to kind of elaborate on that. So new construction or resale homes and older homes, I feel like people think they're like 19 homes from the 1900s, but an older home could be 2018, 2020, 2020, even in 2022, 2023, because obviously they're older, they're not brand new. So older homes, you can still use every single one of these strategies. The reason why I went more so into new construction is vast majority of the people that follow me on Instagram or know of me is new construction, but I still do a ton of resale. They all apply. It's all just negotiating with the seller, right? I got my client $15,000 in seller credit from the seller. And it's just making sure that we strategize your offer to make it make sense for the seller and to make it make sense for you as the buyer. And sometimes what I even say when we are in multiple offers is, hey, the home's at 520,000. Let's go in at 530,000 and ask for those $10,000 back. What that does for you as a buyer is that extra $10,000 is maybe going to be 50 to 100 bucks more on your monthly payment, but it's going to give you $10,000 back. What it does to the seller is it says, okay, they're offering me $10,000 more. They want the 10,000 back, but I'm still getting my 520 that I wanted. So there's different ways to also play it with sellers where it can still make sense with them, but also not make you look like and still give you a good at bat at getting accepted. Right. So it's called stacking. So we stack the credit we need on top of the purchase price. And then we say, hey, Mr. Seller, we want to purchase your home. I need 10,000. I understand you want to make the 520 that you're asking. So I'm going to give you 530 and we kind of begin a negotiation there. So every single one of these tactics can be applied to resale homes, new construction homes. It's just a matter of figuring out one, who is going to pay for it? Is it going to be you? Is it going to be the builder? Is it going to be the seller? Is it going to be the lender? And then that's when the negotiation begins. So again, I will be blocking out, I'll be blocking out a few hours in my calendar tomorrow if you guys want to schedule a call with me and kind of go over everything. By you just hopping on a call with me just gives you the automatic $2,000 of my personal commission to you guys. So there's how many people on here? There's 10. So that $2,000 times 10, that's $20,000 that I'm giving you guys to help you, whether you want to bite on the rate with it, you want to use it towards your closing costs, you want to go get a new appliances, you get to decide how you want to use that money, but that's just kind of as a thank you for hopping on this call, taking the time to come and learn with me and allow me to educate you guys on this. With that being said, though, I'm not seeing any more questions come in on here. So I'm gonna give you guys a few more minutes if you have any other questions in regards to purchasing, to selling, to rates, to anything of that nature. So I know somebody here mentioned, I currently have a home, but do I still qualify for FHA? Did you plan on keeping that home or selling that home? Because if you plan on keeping it, there's ways we could go about it. And if you plan on selling it, there's ways where we could use the equity of your current home and essentially just do an equity transfer, or at least use some of the equity to cover your down payment and closing costs. And that way you don't have to like even touch anything you have in your bank. Overall well explained. Thank you so much, Esmeralda. I'm very happy. This was my first webinar, so I appreciate you all coming on here. I know it was super last minute. I posted this on, I think it was Friday, and I'm very, very ecstatic that you guys joined. So I appreciate it. Your team is awesome. My wife and I are super motivated with you guys. Saludos to Augustine. Marcos, how are you? Yeah, Augustine's great. Great. And I appreciate that. Always feel free to reach out to me or him. We are, we're very motivated to get this, get this to happen for you guys. I'm excited. Thank you so much. Amazing webinar. Hope to work with you soon. Yes, Oksana, if you have any questions at all, feel free to reach out, schedule a call with me. We can at least chat, get a game plan going. I thought this was awesome for you to host. We'll explain. You guys are so sweet. I'm going to shed a tear. I'm kidding. All right, guys. Well, I appreciate all of you guys. If you guys need anything, don't hesitate to reach out. You guys will all be getting an email from me to go ahead and schedule that call if it makes sense for you guys. And again, like I said, there's no obligation. You're not gonna hop on that call. I'm gonna try to sell you a house or have you sign some paperwork. So one thing to look out for is we are in August. So I don't know if you guys heard, and this is something I haven't even touched base on anything that I promote. But August 17th, a new law comes into place where agents' commissions are now being negotiated. I definitely want to work with you and your team. Thank you. Thank you, Viviana. So what that means for you as a buyer is I just want to put this out here because there's a lot of negativity around it on the media, online, just everywhere. And basically what happened was there was a lawsuit between NAR, which is the National Association of Realtors, and sellers. So some sellers went and they said, hey, why are we paying the buyer's agent commission when the buyer should be responsible for that, right? But here's where it gets a little bit confusing, right? Because buyer agent commissions are always negotiable. When I go sit down with my seller, I say, hey, Mr. Seller, this is what me and my company charge. You get to decide what you want to pay the buyer. Normally it's anywhere from 2 to 3%, right? They were always negotiable. The seller's always new to it. For some reason, a lawsuit came out. A lot of people say Zillow was behind it, but nonetheless, what that means for you as a buyer, there's a lot of talk of buyers are going to be responsible for the buyer's agent commission. And when a buyer's agent is making 2% of the sale, you can think of that as another down payment, right? Like how in the heck are you as a buyer going to, you've already worked your butt off saving your down payment. You've already made sacrifices to save up your down payment and closing costs. You've made the commitment to your work to get that work history to purchase. And now they're saying, oh, you need to pay your buyer's agent, right? That is the whole thing, right? It's just like they're making home affordability even harder. But I just want to tell you guys, myself as an agent, do I foresee this change coming into play fairly quickly? No. I still believe buyer agent commissions are negotiable. And if it comes to it, I believe in my negotiations. I will go negotiate with the builder and the seller to cover my commission. So you as the buyer don't have to have that extra expense, right? What it's more so for is our commissions are now disclosed to buyers, right? Before, because the seller would pay our commission, you as a buyer wouldn't see it because it wasn't an expense, right? And so now that's just kind of changing, right? It's just getting more disclosed. It's saying, hey, I as your buyer's agent, I made 2% on this, but you didn't have to pay anything, right? So there's where it gets a little bit tricky. I just want to throw that out there because I know there's a lot of noise about it. If you guys haven't heard about it yet, you probably will within the next week or so. Just know as an agent, I'm not worried about it because I know that you guys are going to be okay. Because I'm going to do everything to go and negotiate my own commission because I believe in what I do. And the exact strategies I use to negotiate on your behalf, I'll use to negotiate on my behalf to make sure that my commission is covered for you guys. All it really means is that you guys are just going to have to sign a piece of paper that states, hey, Angelica is my agent. I understand that Angelica is making 2%, and I understand that the seller or the builder is paying my commission. Now, in the event that they're not going to pay my commission, then at that point, it would be a conversation of like, hey, what's your rate and that type of stuff. But as of right now, for you guys, I wouldn't worry about it too much. I haven't seen any changes, anything. I know a lot of agents are freaking out. I'm actually kind of excited because there's a lot of agents that do this for the paycheck and not for the people. And those agents will fall off because of that. So I just wanted to throw that out there because it's a changing world and I want you guys just to know, right? When it's time for you guys to go and purchase a home, it's like, oh, I didn't know this was a thing, but at least now you're prepared for it, right? All the logistics of it haven't been worked out. It's all going to be brand new August 17th, I believe, or August 14th. So just be wary of that. Make sure that now, if you guys decide to not work with me, I'm not somebody that's like, oh, you messed up. You did mess up, but no, I'm kidding. If you decide to not work with me, just make sure that the agents you're working with, that you interview them, make sure they're a good fit, because once you execute that contract, you can even be entitled to cover their commission, right? So make sure you read that, make sure they explain everything to you. When it's time for me to sit down and have that conversation with my clients, I would definitely be very in depth about that contract, right? So I just want to throw that out there. Some agents can be very nice and trustworthy, but also I want to make sure you guys are protected just as people. So with that being said, I appreciate all of you guys. And then do you guys want me to send the slideshow over so you can reference back to it? Are you guys are good? Please. Perfect. I will email it to, doesn't hurt, shoot it. Perfect. I will go ahead and email it over to all of you guys. And then with that email, you'll also have a link to register a call with me. Awesome, guys. Well, have a great Sunday. I appreciate all of you guys joining. And then should I do more of these with like maybe some more first time home buyer tips? Maybe I don't even know what else. Contingency, like maybe an in-depth, like this is what you need to purchase a home, and then this is what it looks like once you're in the process. Yes, 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 yes. You guys are so sweet. Awesome. Okay, well, I'll work on that. And I appreciate all of you again. I'll let you guys go enjoy some mimosas. No, I'm kidding. Have a good Sunday, everybody.